Welcome to Listen to the Market for Tuesday, February the 7th. The daily bar on Monday for the EurUsd dollar pair indicated that Tuesday would be a buy day. And so it came to pass. There were in fact two buy campaigns, interspersed with one selling campaign. Let's go through the first buy and the subsequent sell, looking only through the eyes of the 60-minute chart, the one on the far left here. The early morning Vanuatu time was lackluster, probably due to the fact that most of the world was asleep, and it was only the outside bar down close in the center of the screen here that heralded in a bit like a starter's flag saying, hey, get ready for something. At the back of your mind, it's a buy day. One bar, 1 hour later, 2 hours later, by now L.I.V.E students should recognize that you had formally the completion of an IPOP dip, with the entry above the high of the second white bar, this one in through here, with your initial stop loss at that low. Your bar of entry, being this bar here, provided a promise that the market wanted to go higher by virtue of having a larger range than the previous bar. So comparing this bar with the bar directly before it. The second hour of the long campaign saw the buyers rush into the market, open pretty much unchanged, and off to the races we go, breaking above the nearest spike high and also above yesterday's high, providing at least a 3-hour return for you. Having broken Monday's highs, the aggressive ambush concept comes into play, saying, hey, time to look for sell setups, sell campaigns. 1 hour later, 2 hours later, the white bar with the up close is the completion of an RTV sell that's not entered. The following bar, the third last bar on this hourly chart, reinforces the RTV sell. So your entry level is at the low of this bar here with the initial stop loss at that high. Entry bar comes along, initial stop loss is not threatened. You have a lower high, so you can calmly lower your stop almost to break even. The last bar on the 60-minute chart on the screen has a lower high and a lower low. Stop loss gets lowered from the previous bar's high to the current high, making that totally a risk-free campaign. So just recapping that part of it, the daily view was for a buy. Tuesday's a buy day. We had a buy campaign which gave us a 3-hour plus return, and then currently a short campaign courtesy of the retest variation sell, and that's locking in a better than break-even return. Now let's do the top-down approach, viewing the market through the eyes of the 60-minute for direction, 30-minute for confluence, and 15-minute for your action points. L.I.V.E students will recognize the last bar on the screen on the 60-minute chart provides a 3S buy as a setup. They will also recognize that there was a 3D concept at play, adding weight to the bullish scenario. Analysis of the last hourly bar shows that clearly with a close in the middle of the range, in the middle third, the sellers are not all that keen. So summing it all up, in line with the daily projection from Monday, looking for a buy courtesy of the hourly view. Moving along to the 30-minute view for confluence, and yes, we do have a bullish confluence. We have a 5th buy. So 2 clay pigeons have lined up. Looking for the third one, courtesy of the 15-minute chart for your action points. Yes, there is a retest variation buy, complete with a surrogate. So be looking to enter on the break of the high of the last bar here, with your initial stop loss beneath the low of the last bar on the 15-minute chart. Next bar comes along, 1/4 the hour, and the market doesn't allow you to go long. In fact, it breaks below the previous low, then reverses the close above the previous close. It still is a retest variation buy, so simply you lower your selling level from the high of this bar to the current bar's high, with your initial stop loss beneath the current bar's low. You still have the hourly set up to buy, you still have the 30-minute set up to buy, nothing has changed in reality. Entries achieved on this 15-minute bar, so now you can raise your stop from this low in through here to the low of the last 15-minute bar. By now, the half-hourly bar has also finished. and that provides the view that it's an outside bar. Higher close, white real body, everything's in line for a continuation of this movement up. Next bar comes along, and the buys have come in with gusto yet again, in line with the daily projection of being a buy day. High or low, we can calmly raise our stop loss to the last low of the 15-minute bar. Broken above Monday's highs, promise of higher highs to come, no need to panic. Next bar comes along, and we have a higher low, so simply we raise our stop from that low to that low in there. The fact that the range is smaller is saying perhaps the buyers are running out of steam. Let's see what the 30-minute view provides. The 30-minute view provides a promise of higher highs to come. Nice. The 60-minute view likewise has a promise of higher highs to come, courtesy of the larger range. We're better than break even. Rock on market. We make a higher high yet again and a smaller range still, so we can bring our stop up to the last low of the 15-minute chart. Whilst this bar has broken that low, using the particular stop loss technique in terms of rounding, one would not have been stopped out of that long position. The 30-minute chart now has rolled over, and we have a 30-minute view with a higher high, higher low. We can actually revert to using a 30-minute stop loss as a trailing stop loss now, rather than the 15. This is an example of how to roll your position from an initial 15-minute campaign to now a 30-minute campaign. And this allows for longevity when the large movements do come along. The 15-minute trail would have been stopped out through there. 30-minute trail is still intact. And that way, you have the opportunity to capture some rather interesting moves in all markets. Just moving that along there to show you where we are on that bar there. Somewhere in through there would have been stopped out again. There was a nice little flip-flop formation there in the 15-minute, allowing you to add to your position to ride that movement up there again as well. So just recapping, the top-down approach requires you to use the 60-minute chart for the direction, the 30-minute for confluence, and then your 15-minute for your action points. The real art is in rolling your position from a 15-minute time frame, or from a smaller time frame generally, to a larger one to lock in more profits. The whole idea is to have very tight control on your risk when you're getting in. Then as the market's moving in your favor, to loosen the reins, and then when the move becomes more mature, in inverted commas, you want to bring the stops again close to the current price action. Just visualizing, looking at your risk being from that high to that low, about 15 pips, that was an 8R plus return, just on that one long campaign. Was there any clue that the market would go that high? Not a one. But what there was Monday's designation for Tuesday being a buy day. We had the first buy set up, giving us a 3R return, and then the final bonus, the icing on the cake, being the 3S buy, the FIP buy, and the RTV buy, all coming together to give us a rather outside the bell curve return to the day. Thank you for watching. Catch you next time round.